Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. So this is going to be a trade that we're looking at for educational purposes only. It's not a trade recommendation from any of my services. So what I'm doing here is I am at Market Chameleon, marketchameleon.com. I have looked over this unusual option trading list and sorted it by volume to see where a lot of the action is. And you can see some different names up near the top here this time than what we've looked at in the past. But going down the list, something that I found interesting is all the way down here in UNG, United States Natural Gas, which is, of course, an ETF that tracks natural gas. Natural gas has been in the news a lot lately. There's a shortage, particularly in Europe. There's been strong demand for natural gas and not enough to go around. The price has gone up quite a bit, although today you can see it was down 6.5%, but it had been on a tear lately, and at least some people seem to think it's probably still going up. Looking at this, 58% calls, 42% puts. Generally speaking, the more calls tends to be a bullish sign, so maybe some people considering a bounce back after a big down day. So about not quite 50,000 trading, which is 2.5 times the normal amount. So first off, you can see UNG had been kind of just cooking along here around 10 and then slowly getting a little higher, and then just recently really has taken off as high as a little over 20, now down to again about 18 or so. But you can see a lot of volatility and a lot of movement higher over the last few weeks. All right, so here we have the trades in the options, which I have sorted by quantity, and not a ton of big blocks, but just a lot of action in general. And one thing that I saw right away here, which I thought was a pretty interesting trade, was this one in February of next year. So that's about 5 months from now, roughly 5 to 6 months. And you can see that with the stock at about 19, looks like someone sold 250 of the calls at 26 for $3.05. Now this was stock contingent, so that means it was done with stock, and this seems to be a covered call. So this is an interesting covered call trade because it goes out to 5-6 months, and it is pretty far out of the money. It's 19 and it's all the way up to 26 that's being sold. On the other hand, the shares of UNG are being purchased, so this is suggesting that maybe there's not there's decent upside all the way up to 26, right? From there it gets capped out, but also maybe not a ton of downside either, because the shares are being bought at the same time. So basically down to about 16, and this trade still remains profitable if you take the premium received out of the stock price at the time. So you're looking at about 16 up to 26 is what this sort of implies as a potential range for UNG during that period. But it's interesting, it does allow the stock to go up to 26 before it gets capped out. Meanwhile, the 305 is about a 15 or 16% return on cash over that period, which is obviously good percentage over the course of 5 or 6 months. So interesting way to play that trade. Covered call, high premium going out so far. So just be interesting to watch and see what natural gas does. This is probably more of a chance of someone taking advantage of the high premiums really than watching the price of UNG. Certainly they can hedge the downside risk if the stock does revert and goes back down to the levels that it was at before this recent move higher. So it'll be interesting to watch, but that definitely caught my eye. So We'll be back next week with a new trade. Also, if you're interested in learning about options, particularly calls and puts, buying, getting started with directional sort of trading, Option 4 Trader Pro is the service I have, and there's a link on this page for that. So talk to you soon.